Good turnaround Tuesday, Warriors. How's everyone doing today? I've been notified by the team that they're extending the promo offer for another 48 hours. So that means it'll be ending tomorrow. Okay, so there won't be another one. I've seen them do that before. They just want to give people a chance. Hi, Sean, Shahab, that may have forgotten about the expiration of it. Hi, Cheryl, Monica, nice to meet you. So here we are, 3 days before the NFP. And if the NFP wasn't going to be here Friday, Amit, I'd be much more aggressive. So the question for me for trying to pick a dollar top is this enough right here? Or are we still going to extend up until up into this 3 drive line, which is coming in right around par 99.90 or so? And we're starting to get some signs, decent divergence on the last low on multiple time frames in the euro. Not great because we're under 30 on the 1 hour, but the 15-minute definitely down here held above 30. Almost looks like we have two and that I should be patient for one more shot down, maybe 108.50. And I just have a vibe after I tweeted that yesterday Blake was talking about his guesstimates for the NFP, and he's looking for some weakness, and that I've seen multiple turning points, inflection points on the dollar on the NFP that have lasted for more than 15 minutes or a day, but at times weeks and months. So kind of have a feeling that could be the day this coming Friday. Let's see, Steve's writing me something. Okay, anyway, so yen got back to the old high up here from last week and came off. Still looks pretty good, but I'm trying to top pick that. See, we're starting to diverge here. We actually did not make a new high. We didn't take out this. It's the same high as here, which makes me think that they most likely will take it out, clear out stops, and their accounts up above 109. I tried it in here at 14, so I'm down 20 pips on it. I, wish I hadn't have done it. You ever do a trade like that, guys, and wake up the next morning and say, I wish I would have waited? Give me a why if you ever hear, hear yourself say, oh, yeah, I wish I would have waited. Okay, so you know how you overcome that? Huh? Any idea? If you're like me and you're usually early, well, you could do that, Cheryl, but sometimes no. Put a very small no, you don't drink heavy, and no drinking during trading, Ziggy. Do something else, or say normally you're a full one lot standard trader, right? And we've talked about this since face start. There you go. A small piece, maybe a quarter position, 0.25 if you're a one lot trader. It will get you to pay attention. I guarantee you that. So, sometimes I do it just to get my head into the market. I don't know about narrowing your stop. I'm a bigger believer, Cheryl, in uh, using less leverage, right? And letting your trades breathe. Sometimes we try and be too perfect and our stops are too tight, and then we get picked off, and then what we were looking for happens after we're liquidated out on the trade. So I'm not a big believer in very tight stops. I used to do it when I thought I could always be perfect, and it took me many years to know I'm not perfect. It's the exception, not the rule. That's not a bad idea. So you could sell over 108.50, Sean, but it's the exception, not the rule, that I would put on a trade and have very little drawdown, or it would start to work right away. It does happen, but don't delude yourself into thinking it's going to happen more than, you know, 25% of the time. So, 75% of the time, you are going to experience drawdowns and you're not going to be perfect. So reduce leverage and let your trades breathe. I'm still of the mind if the S&Ps are going to continue, and I showed this yesterday, see how we have these bully bands pinching here? So far we've had it try and come out on the upside. Sometimes when that happens, the first breakout out of compressed bully bands is a fake out. But with everything that's going on, and you guys remember Friday, I called out a short and we had a big break here. And, 29.75 was a big number to me. To Steve, 29.60 was. But the bigger number is this 29.40 level that we almost got to on Friday. But with everything that's going on, we're like one good day away from new highs. So I just haven't done anything here. Maybe I'll wait for the NFP here uh, on the S&Ps. I do think though, if we are going to new highs, and there's still people looking for 30.50, 3100, that we should have some type of sympathy rally in crude. So I have a hard time. I got stopped out trying to get long yesterday for 60 pips. And, I don't feel like doing it here. But I would think that if we had a big rally in S&Ps, it would at least be a bear market rally in crude, 63 to 54, $9. Why can't we rally halfway back? So the ideal scenario for me now would be the S&Ps to blow off to the upside, right? Blow off to the upside, unless we're going to reverse today on turnaround Tuesday, and have a sympathy rally in oil. So that would be a new high in S&Ps, get a new high above these highs, and then have some type of failing rally to sell into in crude. Okay. The other dollar pair I'm looking at that has finally attained the 61.8 level is Swiss, but doing nothing wrong. Right now I feel a little bit more comfortable top picking this that is not making a new high, USDN, than I do this. But think about it in these terms. The euro has taken out its low when the Swiss was topping up here. So with all the dollar's strength and the dollar about to make new highs, we're still 100 pips or so under the May high in Swiss. So it's a preferred short for me. Sean's looking for 30.47 in the S&P. So use that to key off perhaps a crude short if you get a sympathy rally with the S&Ps to your number, Sean. Capiche? That's the way I'm looking at things. So again, there's another 2 days left to be with the best team on the net. To have great research at your fingertips that would take you hours upon hours a day. Do you know how I know it would take hours upon hours a day to do this and to do all this underneath it? Is because I know how many hours the team works every day getting the analysis out to you guys. You get the push alerts. Really, what a great website. But I think just like everything else in life is a manifestation of yourself. Like, if your office is chaotic and it's a mess, most likely you're not too organized in your life. But I really think that this website is a reflection of the work ethic and kind of a mirror of the creators, not the developers, but the creators, which is Stephen Blake and Stella and their whole team. And I try and find a website that you don't have to leave throughout your trading day except to go to your platform. I wouldn't be surprised before it's all over that you're going to have that functionality too. So yesterday, Blake described this decline in euro as a stop hunt when we went to new lows here yesterday, and we're getting a little hook candle here, Blake. Are you trying it?
Nope,
Blake Morrow?
nope, not yet. But
Okay, but
I'm already venturing into your other idea.
what?
Well, you probably didn't see the pattern in play then this morning. So
Yeah.
no, I'm already I got limited into a Swissy short,
Oh, okay.
right? So
All right. Yeah, I
yeah,
mean, it's a good area. The only thing that's holding me back is this RSI and some short-term stuff, but that it may have to do a little work up here
yeah.
because that's a pretty high reading on that. But on the 4 hour, even the 4 hour, but it's, I don't know. You look at a lot of things too, Blake, and I always,
Hello.
oh, okay,
Yeah.
that's the website. Yeah, that ran squawk. Okay. Um, that I'm always torn between a price getting like to a fib area that I'm looking to sell and some of the momentum indicators that tell me to pause. I'm sure with you, it's all price, right?
Well, it just last night, the overnight analysis, if you,
I'm going to it now.
yeah, the overnight analysis on the Swiss, we talked about the confluence of the 1.001415 level. And you can see if you go to the dollar Swiss basic technical analysis, I think you're on macro.
Okay. Oh yeah, I don't want to watch Stelios. I'll become an old man. Put it on basic. Here's basic, guys. So you get Stelios, you get Stephen Blake, Andre, and Grega. Okay,
Yeah.
there it is.
So we were looking for, a reversal up there, and so we got up there. So the question is, does it dip back below parity and back below 99.80? And I think that's going to be uh, the place that is going to be a big inflection point. The problem is this morning, and let me go ahead and
Go ahead,
pull over
buddy.
to the charts, is that the cable has been just getting wrecked this morning. There's nothing specific. I was, listening to these guys. Some of the traders that we follow as a firm, and they're like, it's just, there's not anything really specific that's driving down the cable, but the cable's just getting destroyed right now, and that's obviously it's the dollar. The dollar is already strong as it is. Let me remove this really quick. Dollar's already strong as it is. Pound just is taking out stops below these lows, so it's just kind of it's like a little bit of a feeding frenzy into dollar strength. Now the euro, you know. Um, I can't get really excited about the euro while we're below this 109.25 level. So you asked me, hey, am I playing the euro on the long side? Not yet. Even though I did short the Swiss, which is basically the same trade. But as you pointed out, the dollar Swiss and like you take the dollar yen, those currencies are not at, you know, yearly highs where you have the euro at yearly lows, and same with the cable's obviously dragging lower as well. But so I'm not like particularly excited about the euro down here. What I was hoping for is to get up this morning and to see the Aussie stronger. I stayed up for the RBA, and then it spiked up and then came down. I'm like, ah, man, it's not going to do it. And obviously here we are, much lower this morning. But what I was hoping to do is wake up this morning and the Aussie was going to be a little stronger, because that was going to be my trigger to start, really being long, some or short some dollars, and maybe buying the euro and maybe buying the Aussie a little bit more aggressively. But the Aussie just got just walloped because there was no real guidance from the RBA low speech. He's it's the fact of the matter is they're they're keeping the door open for possibly more cuts. And the Aussie came under pressure. So with the Aussie under pressure, the Kiwis under pressure. The Kiwis at the 127% extension as well. Very divergent relative strength down here. So and you have to also realize that these DSIs are pretty extreme in some of these currencies. So you got to be extra careful with getting too aggressive.
I saw 9 on the euro, Blake.
Yeah, 9 on the euro. I think the Kiwi was at 10 or 10 or 11 or something like that.
No,
So
they're not even teenagers.
Yeah. I mean, when you're in the
Adolescents.
you're a single digit midget, on DSI.
Be
So
careful there.
what's that?
You've heard the story about the. I talked about it in the
Oh.
webinar a few days ago. There was once Peter Schiff that had actually was talking about stocks. So he mentioned that the single digit midget, and the next day he received a letter from the Small People Society telling him that is abusive language.
Yeah.
Really?
Yeah. Really, and he was referring to a stock. Believe it or not.
Wow.
Yeah. Well, Steve's loves Peter Schiff. He's a big fan.
Yeah,
he's got his poster up.
Yeah. So okay, I'll definitely be careful with that. But it's man, I've always used those terms even 20 some odd years ago. But I guess political correctness 20 years ago.
As you understand, I don't agree with being careful. I was joking, but the story is true.
Right. Well, thanks for the reminder for that. So I think we got to watch these pairs. We have Canadian GDP this morning, so that's going to be pretty important. And if you see the Canadians really, we are range bound, 133, and if you go over to the daily chart will kind of define it for you. So you got 133 is the 200-day moving average right here, and support comes in at 132.20, and we are pretty much mid-range at the moment. But I don't, I'm wondering if we're going to finally break out, because we've seen all this dollar strength, and if we get a weak Canadian GDP number, maybe the dollar Canadian can try to break this 133 and change. And we'll see if that happens. But man, it's been really, really challenging if you've been trading the Canadian. And you've probably heard my analysis over the last couple of weeks. I've left this thing alone. I don't have any indication of what I should be doing here. The guys in my office are pretty bullish the Canadian dollar in general, and I have to admit, you look at the dollar Canadian versus what the Aussie and the Kiwi are doing. The Aussie and the Kiwi have been getting destroyed, right? And the Canadian dollar has not, it's not down significantly. You got the Kiwi and the Aussie that are just continuing to blaze new lows, where the dollar Canadian is actually not making new highs. We're not above this 134, which I would think would be the case right now. I would think we'd be rallying right above 134. Obviously, it would be a bullish breakout, move above 134, but it's just not happening. So, but does that build the case that you should be long the Canadian right now? I don't know. With USMCA at risk, the risk of weaker Canadian dollar, I think, exists. So, but I'll be looking for clues. Maybe a move above 133.20 does the trick. A move above this 200-day moving average. The flip side is a move back below 132 would be quite bearish, I think, for this pair, because it has the Canadian dollar has held up very well considering the other commodity currencies at this point. So for me today, what I'm going to be looking for is I'm really going to be looking at the euro and seeing how we respond here at the 109.20. We couldn't close above 109 yesterday, so if you're bullish the euro right now, you're probably a little bummed out that we broke. We closed breaking down. It's not like we put in some sort of reversal candle. At the same time, it's hard to get really excited about being short down here because it seems like dips are contained right now by this 127% extension of this last move higher. So what do you do? Well, I think you have to, stand aside, look for some clarity. Right now, we're not seeing it in other than, the dollar has had persistent strength. I mean, you look at the dollar index, we are, continuing to brush up against these highs. Uh, Divergent relative strength, yes. Is that reason enough to stand in front of the dollar at this point? I don't know. I mean, like I said, I shorted a little dollar Swiss this morning, but nothing big, nothing exciting, and I'm definitely not attached to it because, let's face it, the dollar is really, really strong here. I'd have to see a nice reversal intraday and the dollar close at the lows before I got overly excited about being short the dollar in any way, shape, or form. One of the other things I think we should note, and I'm sure Steve's going to talk in a little bit more detail about this, is the precious metals. The precious metals. If you look at silver, we bounced, and this is we've been looking for that breakdown for the last couple of days as we broke through this green trend line. We bounced at the 50% retracement. Gold also is finding support at the 618 of this last move higher. We do have a head and shoulder pattern that the points lower, but we are finding our support. So finding some near-term support that might stem a little bit of the dollar strength if that's happening. One other thing I guess I should point out really quick, and then I'll talk to Steve and Stelios here, is look at the dollar yen. The dollar yen, even though it hasn't broken out, it's kind of like the Swissy, it hasn't broken out. We are up at the 108.50, which, by the way, if you look here, okay, this is the 50% retracement. So, a move above the 108.50, a nice clean move, and you can see that the overnight high was 108.46. A nice clean move above that would be pretty bullish the dollar yen. So that's something to keep in mind in case the dollar continues to rally, or even these yen pairs start to find some support. Because you take a currency pair like the euro yen. Look, we're not breaking below the 618. We're holding that 618 right now. Is it moving? Is it really rallying right now? No, but we haven't been going down.
Looks better
And
than the euro because of the yen part of it.
yeah, exactly. And so this could
And
shape up.
Yields are up pretty good today, Blake.
They are. Yes, that's a great observation, Dale. Yields are up, and that might keep the bid in the yen pairs. So anyway, just a few observations. Couple comments have come in. Let me see really quick. Patrick says that divergence is telling a story on the New Zealand dollar. It is, and the DSI is the DSI is also divergent, or excuse me, divergent over extreme, if you will. But that Kiwi is extremely heavy. I mean, I don't know. Do you really want to step in front of that right now? I have some New Zealand yen on, and it's it's not really moving anywhere because the yen component, it's very similar to the euro yen in that respect. But if you look at the Kiwi dollar, I mean, it's getting destroyed. Patrick says Canada, they are open for QE. Yeah, and so why hasn't, I guess in response to your comment, Patrick, why hasn't the dollar Canadian really launched higher? Why hasn't the Canadian dollar weakened significantly? I guess we'll have to wait for Canadian data to come out here shortly, and we might we might see a little bit more movement in the Canadian. I'm surprised the Canadian's been as capped as it is. Patrick says also Eurozone PMIs did not do well last month over month, followed by 10 basis point cut. So move lower may still occur. We continue to have good fundamental results on dollar news. Yeah, I mean, the Eurozone data is disastrous, especially German data. I mean, you look at German PMIs. We could just go really quick because I can get to it really fast on this particular chart. You go to last week and you look at like German PMIs, because I knew right where to find it. Look at the manufacturing PMIs. I mean, we're seeing numbers that we have not seen since 2009.
And
that's
most
ugly.
importantly, Blake, look at the consistency of the drop from the highs. I mean, it's not like an outlier. It's not like, you know,
Yeah.
1 month that things went wrong. I mean, it's
it's
a clear downtrend, right?
It is, and so yeah, it's ugly. I mean, you know, to be long the euro, the only reason why, and I'll say this because I believe it, the only reason why the euro quite possibly could bounce is just from a risk off short covering from, because it's such a funding currency, and that would be the predominant reason why we would see a bounce. And Jack says the Euro Swiss, the same story. Yeah, the Euro Swiss might be a little toppy here. Let's see what the Euro Swiss is doing. I haven't looked at this currency pair in quite some time. And good morning, Jack from South Africa. Let's see, where is my Euro Swiss? I don't know where it is on my. Sometimes, you know, it's like I have my list of currencies here, and it gets removed for whatever reason. Somebody accidentally clicks the X, and you know, might be on mine. And yeah, but anyway. Oh yeah, here's the Euro Swiss. Really not doing a whole lot. Yeah, really not doing a whole lot. Capped at the 50% retracement. I don't know how excited I'd be about the Euro Swiss. I know a lot of people have been trying to play it off of these lows after this range extension down here, and so every time it's been down at like 108.50, you know, trying to play it off of those lows, which is fine. Problem is the Euro Swiss isn't really going anywhere, kind of like the dollar Swiss as well. So
Might
you're right,
also
it
be
is the
the
same story.
S&B. Might also be the S&B putting their hand there.
Yeah, it could be, but you know,
I mean,
ultimately they want a stronger Swiss. So
yeah, they've openly said that, you know, when they let the floor go, they openly said that that doesn't mean that they won't intervene in the market. So
yeah,
you know, they've even said it. I mean,
yeah,
we don't have to speculate about it.
Yeah, exactly. Well, anyway, well, I'm gonna pass it over to you guys. We had just really quick, and good morning, Stelios. I don't know if he's here. Hey, good morning. I just want to let you guys know we did have a couple requests to just leave the offer open for a couple extra days, so we are extending it till the second, so it'd be till tomorrow. Because of a few requests from whoops, I didn't mean to do that. A few requests from some people that were looking to join. So the seasonal offer will be available till Wednesday. So just let you guys know if you guys were like, oh crap, I forgot to do that. Well, you know what? You have a couple extra days. So with that being said, you guys have a great trading session. Thanks everybody. I'll see the rest of you all in the ForexAnalytix chat room. Have a great trading session, everyone.
Thank you, Blake.
You too, buddy.
Thanks, Dennis.
Thanks. So we have Canadian data in 1.5 minutes, so we have time to just mention a couple of things. First of all, Australia, Blake covered it. They have left the door open for further cuts. I think Lowe actually said they are inevitable, and he stated the situation in global economy. I mean, we know how it is. You saw the PMIs today; they were absolutely awful. And I'm not just talking about actually German PMI beat expectation a little bit, but at 41.7 manufacturing PMI, you wouldn't call it a good number.
And as we saw before, a clear downtrend in PMI. So you know, even nothing moves in a straight line. Even if we get like a rebound or whatever, the situation looks bad.
Yes, and you had Sweden. I mean, Swedish PMI was 46 versus 52 expected. I mean, these some pretty serious numbers. Actually, surprisingly, UK PMI was a strong one of the day, and so that, I mean, the move in sterling today is a little bit tricky. There was a headline earlier today about a senior EU diplomat saying that, look, there's been no progress being made, no firm plan being offered by the UK side. It's all been just brainstorming. And what the market does not want is uncertainty. We know that. So Canadian data.
Yeah, I'm switching to it.
2.1.
Let's see. GDP month on month.
0 month on month, so 0.1 worse than
0
expected.
versus 0.1, 0.2 it was previously. So yeah, worse Canadian data. Let's have a look at what's happening with the USD card here. There we go. Yeah, a little bit of a bounce, but if you have a look at the daily, I mean,
interestingly, in the
stuck.
past few days, even with oil crashing, I mean, it was rallying before it crashed. The Canadian's been very stable.
There's been so many currencies lately that they feel like they're pegged to concrete or something. I mean, I don't know exactly what's happening, but I know that it can't last forever.
Yeah, but I really think the big picture. We saw Chicago PMI yesterday. Really bad miss. We have ISM manufacturing PMI of the US today again. You know, who's to say why shouldn't that miss again? I mean, it's a pattern now in the whole of the Western economies, in my opinion. So
there's no question about it. There has been a global, and that includes the US. For example, jobs data. We've had last year, 2018, and now 2019, actually, I mean, the last, let's say 1 year from today, we've had an obvious slowdown in the jobs gains, right? So we've also had deteriorating numbers, you know, across many sectors. So there's no question about it. There is a global slowdown. It is also affecting the US, despite having seen both a turnaround in monetary policy and especially intentions and forward guidance, which is important, and fiscal stimulus. Let's not forget that Trump did provide fiscal stimulus, you know, as soon as he was in office, and he could, you know, start doing stuff with the tax cuts, etc. Despite that, we're seeing the global slowdown affect the US as well. And given how long this business cycle has been, there is a huge chance that we're headed into a global recession.
Yeah, and also the quality of jobs is deteriorating everywhere, and
no question about it.
With costs, with real costs increasing every year, disposable income of, you know, the average Joe is reducing massively. You know, costs.
I was explaining that the other day, but I don't know if you were here, Stelio, that the same thing they've done with the CPI, the same thing they've done with how they count jobs numbers.
Yes.
So, for example, until a few decades ago, people that were employed in a part-time job, but they were looking for a full-time job, were counted as unemployed.
Yeah.
Now, you might have 3 part-time jobs, which nobody wants to have 3 part-time jobs. I mean, people that have 2 or 3 part-time jobs are obviously people that would want to have a full-time job, but that's all they can get, right?
Yes.
So if you have 3 part-time jobs, in the employment data, that counts as 3 jobs added to the market, which, as you understand, it's distorting completely the picture, right?
Absolutely, yeah, absolutely. So you have, you know, with the quality of employment reducing, you have disposable income reducing. You know, all the costs like medicine, education, housing, everything is on an upward trend, and so with less and less disposable income, people get squeezed. And that's really the summary. So it's not looking good on a global scale at the moment, and I don't see what's going to fix things. More QE is definitely not going to fix things, because the trickle down effect is non-existent. Let's call it what it is. So I don't know what you think, but I don't know what's going to fix this problem.
I think that they will keep repeating the same mistakes until the situation goes completely out of hand. And then, you know, politicians, unfortunately, are only end up doing, and that's a global phenomenon, the right thing, with very few exceptions, once there is absolutely no alternative. So good politics would be to act proactively and make sure that problems do not inflate, because we all know that when a problem becomes bigger, then the pain to fix it becomes a lot bigger. The problem is the usual moral hazard of the political cycle, which means every candidate has every personal reason to want to postpone finding solutions for problems, because we know that solutions are always painful. Okay, from the same respect that a lot of people don't realize that, a lot of people believe that, you know, the let's say the healthy part of an economic cycle is the boom, and you know the bad part is the bust. But if you look at it from, you know, the function of the economy, very frequently, especially with what we've created now, the monster we've created now, usually the problem is the boom, because it's usually an artificial boom, and the bust is the phase that the economy is trying to undo all the misallocations of capital, all the problems that have been created during the boom, right? So of course it feels much better being during the boom than it feels being during the bust, but bust is an inevitable reaction, let's say, from the body of the economy to try to cure the disease, right? So, you know, the thing we should be doing is not trying to influence business cycles and create artificial booms, so we don't need to have those big busts.
Absolutely, but who's going to do that?
Somebody that is going to be willing to take the political risk, and unfortunately, those people do not elevate and find themselves, challenging for being prime ministers, presidents, you name it. That's a problem.
Yep. Okay, that's about it for me.
Okay, Stel. So let's go to the charts. We have quite a few things to talk about. Let me go through the questions. We have quite a few of them. That divergence is telling a story in the Kiwi. Yeah, I was talking about that divergence. Let's start from there. The Kiwi and the Aussie, I was talking about that divergence, but keep in mind that soon enough, there might be no divergence, right? I mean, there was a divergence in the sense that the Kiwi was pushing lower while the Aussie wasn't. But as you see, the Aussie is currently testing the previous lows and is in danger of even today closing at new lows. That is why, you know, it's nice to monitor divergences, but it's much more beneficial to acknowledge, the direction of the trend. So, for example, in the Kiwi, we showed yesterday how that rejection from the 64.25 area was a major signal that we remain in a downtrend. And then I even showed that both the Aussie yen and the Kiwi yen were in bear flags. And I said that, you know, I don't know what's going to happen with the Aussie. And of course, I can predict that, but from a technical perspective, it looks like the Aussie is likely to end up breaking lower than anything else. Kiwi de facto is creating a bear flag. As you see, Kiwi has already made the move, and Aussie, let's have a look at it on the 4-hour chart, and you can decide for yourselves. There we go. Aussie yen. There you go. As you see, it's breaking down as we speak, right? There it is on the 4-hour chart. So as it seems, you know, nothing has changed here. I mean, we remain under pressure. Of course, the Aussie against the yen and the Kiwi has been holding somewhat better, you know, due to the movement of the USD yen. But Kiwi against the US dollar, just, you know, continues to drill for oil. You see several support areas upcoming, 62 cents and then 61 and 57. We drew that a long time ago when we were getting rejected from the 64.25 area here in the Kiwi. You know, I drew that line saying that, you know, the next move is very likely to be the 61.8% extension at 61.56. So, you know, we're not far away from that anymore. I mean, we're like 50 pips away from that. So, you know, you have to keep respecting what the trend is telling us. Same thing with Aussie. I mean, Aussie still diverging in the sense that we haven't closed the new lows. So, you know, if you are really determined to find like a bullish case scenario here, you can say that, okay, if the Aussie stops here, we might have a situation in which we have a triple bottom, right? One here, one there, and let's say the one that we will be creating today. But if you want to put it in chances, what are the chances that we're going to have like a triple bottom? How frequently do you find triple bottoms in comparison to the possibility that in this case we're going to just break lower? As you understand, the chances are overwhelmingly in favor of a breakdown in the Aussie as well. Okay, so that's a situation in which case, if we fib extend the last rebound, you'll see, for example, that 161.8 comes at 65.60, 65.6 cents. Okay, so a very, very likely scenario continuation to the downside. Now, the Aussie against the Kiwi, not much happening here. I mean, despite the move that we had, then it got followed by a move in the Kiwi. So as you see so far, the daily is a spinning top, but we do remain lower. I mean, below the trend line support from this ascending channel. So I think there is still a chance that we're going to see lower prices from here, especially as long as we remain in this purple ascending channel, the bigger one. Okay, so we're near resistance. I think the risk reward would favor being short here for at least one more leg lower. So that's the situation, and I think we've covered all the major Aussie and Kiwi pairs, not the crosses. We'll have a separate look at those. Now, Stelios mentioned the data from Sweden, so worth having a look here at what the USD SEK is doing. Don't forget, very much correlated, of course, inversely correlated to the Euro USD, or very much correlated to the USD Euro, depends on how you want to look at it. So keep an eye on this, because as you see, it's attempting to break higher from this long-term ascending wedge. Okay, I mean, it has remained in an uptrend that's clear for even an amateur to see. I mean, series of higher lows across the board. We're approaching also the 161.8% fib of this move lower, and perhaps it would be worth fib extending this one as well. More or less confluences with the 127%. You'll see it here if I change color. There we go. As you see, it confluences with the 127% extension of this move lower. So both of them are roughly at 997, let's say, okay, 996.50, 997.50. So that's an interesting area to watch. We are at new highs, that's undeniable. Okay, as you see, it's an uptrend that dates back to the very beginning of 2018. So bad data today in Sweden were enough to push it to new highs. Now, Euro USD is still holding, barely holding this descending wedge support. So, sorting it exactly on support is kind of dangerous, but it definitely remains in a downtrend as well. I mean, we need to see a move above 111 to actually, say that, okay, something different might be happening here. Admittedly, it's been a slow grind lower, but an ongoing grind lower nevertheless. I understand it's extremely hard to be short where we currently are, but on the other hand, it's extremely dangerous attempting to be long, because so far every single attempt the Euro USD has made to break above resistances that would make me think that a squeeze higher might be starting, we keep failing. The same thing that was happening with the cable. I mean, the cable had a lot of false starts of an attempt to rebound, and almost every time we got rejected, like from the first major area of resistance. The only exception was the recent breakthrough through the 123.70 area, in which case we made it to the second area of resistance before getting rejected. In any case, though, in the vast majority of the cases, the cable, was getting rejected from the first area of resistance. It once made it to the second one. The DXY also, as you see here, has already penetrated this ascending channel's resistance. Keep in mind, though, that it is still holding below. That's why I'm zooming out. You can see this ascending trend line in purple was acting as support from the beginning of 2018 until we finally broke below it in the beginning of June of this year. Since then, we've tested it once, twice, 3 times, and we're about to test it as a 4th time, in this case as a resistance. So I'm really looking forward to seeing what's going to do from there. Because so far we've had 3 rejections from the same trend line. Before that, we had several rejections as support that time from that trend line. So it is a trend line that has quite a lot of significance. So it is important to see if it can actually, act once again in turning price action in the opposite direction. Very, very close. Anyhow, in this case, I mean, we're currently at 99.60. That's at 99, let's say 70, 80. So, we're just a breath away from that. Now, metals and crude and stocks. We have quite a few questions. Let me. DAX, Euro Swiss. Okay, Blake had already a look at your Euro Swiss cable. Yeah, sure. Okay, so EuroCAD as well. Okay, let's go. Let's start from stocks. First of all, stocks, regardless of if you want to use stocks, regardless of if you want to have a look at the NASDAQ, the Dow Jones, or the S&P. So, we'd better have a look at the S&P because it is the benchmark. Display more or less the same thing. Now, as I mentioned a long time ago, the Russell is definitely diverging. The Russell never pushed to new highs when the other indices were. Another proof that problems are not isolated outside the US economy, because if that was the case, the Russell should, instead of underperforming, be overperforming indices that have a lot of companies that have businesses outside the US. Okay, so if that was the case, the Russell should be doing better than the Nasdaq, the S&P, and the Dow. Anyhow, we have potential wedges here. You can see it here in purple. If I switch to the Nasdaq, you're going to see the same kind of deal. As you see, quite equivalent. I mean, it's not exactly the same drawing, but it's quite equivalent. Okay, we have an ascending wedge here as well. Within that, we're seeing price depreciating in what could be a bull flag. Okay, so there is a bullish case scenario quite healthy and alive here, especially because for me, for any of the US indices, it was all about, and it's still all about, 2960. I said that a lot before we came down and retested it last week as support. So 2960 on a closing basis, on a daily closing basis, is still holding. So as long as that's the case, I think you have no reason to be bearish. Now, a break below 2960 would make me bearish short-term US stocks, okay, for at least one more leg to the downside. Now, by one more leg, I mean that I would very least expect this ascending wedges trend line support to be tested. Now, today, for example, this passes from 2890. So 2890 would be my target if we assume that we close below 2960 at any given point. Of course, for every single day, this trend line support moves a little bit higher. So above 2960, no reason to be bearish. Below 2960, I think you have every reason to be short-term bearish. And then if we also end up breaking this trend line support, that's a different story, because then we open up a lot more downside. So that would make me then bearish in the medium term, not only in the short term. So I would be looking to push even more the envelope having to do with short positions. Okay, so as I said, equivalent situation with whichever of the indices you want to see. Now, having to do with the DAX seems to be consolidating. We pushed higher. We pushed lower after a brief period of consolidation, but we never made it to my target that was 12,060. We came back earlier today. We retested these previous highs, but we're now unchanged on the day. So in essence, we pared back all the previous gains. So there might be more consolidation upcoming from here. Sometimes instruments correct in price, sometimes they correct in time, sometimes a combination of the two. Okay, so not easy to diagnose in advance what you're going to get, but the fact that we got rejected once again from the same area says that we might need more time before we can finally push to higher levels. Now, we had questions about the metals, about crude, about EuroCAD. Since we did mention stuff about the euro, let's get over and done with EuroCAD as well, so we can move to the rest. So EuroCAD is also pushing lower. You can see that. I mean, I was monitoring this trend line as potential support, but it didn't hold. So now we have to see if, for example, this descending trend line if it can form some type of a channel. That actually might be the case. So this didn't end up being significant for the market. So, we might be moving lower than that. Regardless, we already had a fib extension of this first move lower with that rebound higher, and that implied another leg lower at 143.83. We are almost there. Okay, and then we have a horizontal support area at 143.20. Regardless, we're still moving lower within this large channel. Next areas of support I told you are those two, and there is nothing that looks bullish in this chart so far. Okay, so you need to keep respecting the upside. The only thing we have there going for the bulls is a narrow side divergence, but the narrow side divergence might be ongoing for quite some time, and trying to fade something based only on a divergence and not on also on some formation, some technical events, makes no sense, because that divergence, for example, began back in July and it's still in play, and it hasn't done much good to somebody that would be trying to be long. Okay, now having to do with the metals, yesterday we triggered the head and shoulders formation we were talking about in gold. There we go. So yesterday I told you that I'm actively monitoring this support area as the neckline of this head and shoulders formation. We sliced through it, and I told you that my first target was 1460, and we made it there. And if we want to actually have an exactly measured target of this head and shoulders formation, it's quite easy to do. There you go, like 14. Okay, so more downside to complete this head and shoulders formation. So it is what it is. I mean, bearish in the short term until proven otherwise. Same deal here with silver. Silver has stabilized at the 50% fib. Is it done moving lower? No, it is likely it has more to go. I mean, equality target would take us from the first leg lower to a second leg lower, would take us to 16.5. So I think that resistance from this point on is roughly at 1730, 1740. And as long as we remain below that, a continuation towards 1650 is likely. Now, the easy part of the move lower might already be done. So that is something to take into account. But that doesn't mean that the pullback is done. Okay. Now, having to do with crude also plunged through this confluence of supports at 55.40. So now it has completely retraced the event-driven spike higher after falsely breaking this, breaking higher from this trend line. Obviously, that's quite a bearish signal, right? And we are about to also post a lower low after a little bit of a time that we were posting higher lows. So any way you look at it, it is likely that crude is going to continue lower to retest once again this horizontal support area at 50.5. So it is what it is. Not a pretty chart to trade, I can tell you that much. So I would refrain from taking any position here. I mean, the fact that it seems quite more likely that we're going to continue lower doesn't mean that I like to be involved with it. I don't even see the risk reward here to be involved with it. So, you might have an opinion about which direction it's going to move. That doesn't necessarily mean that, you want to participate in it. Another thing, we had a look at the rest of the metals like platinum and palladium yesterday. Nothing has changed there. But another thing worth monitoring here is copper, because copper had a nice rebound, which is also about to completely fail. I've been monitoring this descending wedge here, and it seems like we are attacking the previous lows as well. I mean, if you ignore the wicks, because that was price action during the day, but we never managed to close below like 252. We're quite close to that level. So, copper seems to be remaining under pressure. And that is also something to notice. Now, having to do with bonds, we've actually indeed started another leg lower, most likely. I mean, look at the Bund. That is what I wrote during the weekend analysis. I was expecting a continuation lower here. I'm still short the Bund. And look at the treasuries, right? Both of them produced a rebound, which is likely over. Okay, so I do think that another leg lower has started, which means that another leg higher in the yield rebound. Let's have a look at the 10-year US yields. Here they are. You can see the exact opposite story here. So here in the yields, you can look at this. As a flag or as a pennant, depends on how you decide to draw it, okay? And we seem to be breaking higher. So why not one more leg to the upside before lower? The implications for the USD yen would be higher, and I think there is also a technical formation that would point to the same thing. I had to redraw during the week in this channel, and if you redraw it like this, which as you see, it's quite a valid interpretation, it seems that we broke above this channel, we came back, we retested it, and now we're testing the previous highs. So if my interpretation about what the bonds are doing is correct, I would expect that the USD yen might have more upside before it ends up rolling around. Okay, I'm not bullish long term the USD yen, but in the short term, with what I see in bonds and yields, I think it looks quite likely that we have more upside. What do you think, Coach?
I agree, Steve. I thought maybe it was putting in a little failure. I got out of my shorts, and yeah, I'd rather be short US dollar Swiss, which I'm staying with, and top pick the dollar and let the yen play out I think your levels, at least 109.20, 109.5, I think is viable.
Yeah, we have
You
a
know,
support resistance area at 109, like 30, depending on what you want to focus.
Right.
So yeah, absolutely.
Yeah.
So do we have a guest today?
No, we had a cancellation again.
Okay. Their loss.
Anyway, I Skyped the reason.
Okay, sorry, but I was doing analysis, so I didn't.
Okay.
I didn't see.
Anyway, it's the last invite to that individual.
Okay,
Second
coach.
time this has happened. So, okay, so everyone, hope you had a good turnaround Tuesday. Remember, there's still 2 days left, today and tomorrow, to join
Today
us.
and tomorrow, exactly.
Today and tomorrow, that's right. So, good luck today, and I know it's kind of quiet. It seems like things are building up for the NFP on Friday, Steve, doesn't it?
Oh, yeah, absolutely.
Yeah,
NFP is going to be quite important, hopefully, because we were saying the same the week that we had all the central banks. Let's be honest. In order for the NFP to play a role, we need to see some type of an outlier. If we do see some type of an outlier, I'm pretty sure that we're going to have movement. Now, if we get exactly what the market is expecting, it might be, one of the same. But
do you know what that is? What the market's expecting?
Give me a second.
Like 180 or?
So if you go to our calendar,
There you
right,
go.
coach?
Yep.
And if
Good
we go this
segue.
week, right?
Yeah.
So
See what I mean, guys? There's everything here. Things that I haven't even discovered.
So let's go.
There's investing.com, which also broadcasts our webinars. Yeah.
There you go, coach.
Okay.
140.
All right. Thank you. I confess, I didn't even know that was on the site, that investing.com piece. So it's amazing what you guys have done with this.
And if you click, by the way, here on the calendar, you can also see details about it, right?
Yeah.
Look at this.
Yeah. Look at that. What an amazing job you guys did on this site.
Yeah, and we had no problem in utilizing tools from other companies as well when we think they do an excellent job. For example, the investing.com calendar is a very good calendar. That's why we decided to go with that. So as you see, the market, the previous was 195. The market is currently expecting 140. Okay.
Thank you, Steve.
And here's the history. As you see, there has definitely been a pullback.
Yeah.
During the past 2 months, right?
2 lower highs. Yeah.
Yeah.
Okay.
Exactly. All right, let's see if we're going to get another one, huh?
Yeah. Looking forward to it. And I do feel it in my bones that we're so close to, I think, a dollar turn between here and par, for at least a pullback, if not it being major. I just feel that we're that close. So, after you've been around for a few centuries, Steve, you could kind of like sense things are shaping up even before they happen. That's kind of how I feel about the dollar up here. Because, I mean, they're not killing the euro anymore. You know what I mean? They're just marginal, grinding, eroding lows. And,
which is pretty annoying, because this type of price action, I mean, this slow drift lower is not actually tradable. You know what I mean?
Yeah. But there is an old Wall Street adage: never sell a sleeping market.
Oh,
and also, markets top with violence and bottom in silence. And there's plenty of silence in the euro for quite some time.
There is.
So I warn people.
And you know something, the market is already, I've said that plenty of times, coach.
Yeah.
The market is already very negative, the European and the Eurozone economy.
9 DSI on euro. Yeah, I haven't seen that in a while.
9 DSI in the euro. Yeah, correct.
Yeah.
But you don't see the market pricing in so many risks that are looming for the US economy. So
yeah, even, I mean, like this impeachment thing. I mean, it's
to be honest, I don't take that into account.
Okay.
I don't think they're going to manage to do anything with that.
Yeah, I have no idea.
I
I'm
have
just
no
saying,
idea either. I mean,
yeah.
I'm not a legislator or a judge, but my feeling tells me, nah, they're not going to manage to do much with that.
Well, something else I've learned in a bull market, which I think we still have to say we're in equities,
Of course we are.
right? Anything that can go wrong doesn't. And in a bear market, anything that could go wrong does. So
the most important thing is that in a bull market, the market doesn't care that much about things that go wrong.
That's what I mean.
Yeah. But in a bear market, the market cares about anything that goes wrong. So,
exactly.
It's about what the market decides to focus on. And,
right.
A lot of people that have been trading for not a long time have not experienced how brutal, how violent the shift can be between the market not caring at all about, let's say, negative events,
Yep.
and suddenly caring only about them.
Yeah, tipping point. You get to a tipping
Yeah.
point. But I mean, that just goes to show you, if we were in a downtrend in a bear market environment, do you know what the yuan has done, and the trade war and all of the negative fundamental events that are out there, and the Fed having reverse course would have done to the market in a bearish environment? So, enjoy this while it lasts. That's all I could say.
Indeed.
Okay, buddy. So
you,
don't just count your pips, count your blessings, everyone. And thank you for hanging out with us. It's our mission to build you up, edify you every day, and add value to the mission you're on. So have a great afternoon, everyone. Adios. Thank you, Steve. See you guys.